Welcome to Ezekiel Academy YouTube channel. In this lecture, I want to examine taxation of estate, settlement, and trust. If you are coming across my lecture for the first time, please like the video and also share it with others. If you are a returning subscriber, I say thank you for being part of this channel. So, what is an estate? Estate. An estate is the total property of a person. The total property of a person is said to be his or her estate. The entire property of a person is said to be the person's estate. Then it is used in executorship to mean the property of a deceased person. In executorship, an estate is the property of a deceased person. So, the second term I will examine after estate is settlement. Settlement. Settlement is the agreement by which a sum of money is set aside to make provision for another person. An agreement by which a sum of money is set aside to make provision for another person. The third term is trust. Trust. Trust is an equitable obligation. An equitable obligation binding a person called the trustee. An equitable obligation binding a person called the trustee to deal with a property over which he has custody for the benefit of beneficiaries. The equitable obligation binding a person called the trustee to deal with a property over which he has custody for the benefits of others, known as the beneficiary. So now we want to look at the basis period. Basis period for estate, for taxation of estate, settlement, and trust. The basis period is preceding year basis. Preceding year basis. PYB. Allowable expenses. The following expenses are admissible for deductions. The following expenses are admissible for deduction in taxation of estate, settlement, and trust. Number one, we have expenses authorized by the trust deeds. Expenses authorized by the trust deeds or will. All expenses authorized by the trust deeds or will are allowable for deductions. Then we have fixed annuity paid out of income under the deed. 2. Fixed annuity paid out of income under the deeds. Under the deeds or will. These expenses are allowable for deduction. Then what do we mean by gross income? Gross income in connection with taxation of estate, trust, and settlement. Gross income. Gross income is the aggregate of all incomes from all sources derived by the estate, settlement, and trust in any year of assessment. The sum of all incomes, the total of all incomes, the aggregate of all incomes derived from all sources by the estate, settlement, and trust in any year of assessment. That is gross income. Number 2, we have computed income. Computed income. Computed income is the gross income less allowable expenses. Gross income less allowable expenses. By the time you deduct all the allowable expenses from the gross income, you arrive at the computed income. That means you must have computed the gross income before the computed income. So the first thing is to aggregate all the income. The income might include the profit from trade or business, then the dividend received, the rental income, the interest income, miscellaneous income. By the time you sum up all the incomes, then you arrive at the gross income. From this gross income, you now deduct the allowable expenses to arrive at the computed income. Let's look at the format for the computation of chargeable income. Computation of chargeable income for 20XX year of assessment. Remember, I've told you the basis period is preceding year basis. So you start with the income. Let's have the trading profit, the adjusted profit of the business. Then from this trading profit, we less capital allowance. Capital allowance. By the time you deduct the capital allowance, you arrive at the net trading income. Then you now add other incomes. Other incomes, which might include interest income or interest received, rental income, then investment income, or let me have dividend received. This dividend must be reported gross. Where it is given as net in question, you have to gross it. No, if it is reported net, that means withholding tax have been deducted from the gross amount to arrive at the net amount. Remember, withholding tax are tax deductible at the source. Then we have miscellaneous income, that is sundry income, every other incomes. So you add it, you have this at the total. If you add it to trading profit, you arrive at the gross income. Gross income. Remember, I've told you, if you deduct the allowable expenses from gross income, that you will arrive at the computed income. So now let's allowable expenses. Let us deduct the allowable expenses. The allowable expenses might include the trustee remuneration. Trustee remuneration. The remuneration of the trustee shall be divided into two. We might have fixed remuneration, and then you may also have the variable amount. So this will give you the total remuneration payable to the trustee. Fixed annuity is an allowable expenses. Then we have specific legatee. Specific legatee. Then you may also have residual legatee. Residual legatee. All these are terminology used in bankruptcy or in executorship. So then we may have administrative expenses. Administrative expenses. Then we have any other authorized payments. Other authorized payments in the trust deeds. By the time you sum up this, you have the total allowable expenses. So now subtract the total allowable expenses from the gross income we've arrived at. Then you arrive at the computed income. Computed income. Computed income. From the computed income, you less discretionary payment. Less discretionary from the, that is from the word discretion. Discretionary payments. Those payments that were made by the trustee based on his or her discretion. You deduct the discretionary payment. Then, if there are withholding tax that have been deducted from the rent, from dividends, you are going to deduct that. Remember, dividend income is a franked investment income. Remember, I've told you that franked investment income are income whose tax are deductible at the source. So, franked investment income are income whose tax are deductible at the source. So, you have to deduct it. Less dividend income. It is the same amount reported as income earlier that will be deducted as well. Because the only tax that have to be deducted from this dividend is the withholding tax. Remember, withholding tax will be deducted at the source. Then, after subtracting withholding tax, after subtracting this item, you arrive at the amount available for distribution. Amount available for distribution. From this amount, you less distribution to the beneficiary, to the beneficiaries. The amount distributed to the beneficiaries, you deduct it. By the time you deduct that, you arrive at the remaining balance will be the accessible income in hands of the trustee. You arrive at the accessible income in hands of the trustee. Accessible income in hands of the trustee. That is the format used in computing the chargeable income. Format for the computation of accessible income in hands of each of the beneficiaries. Each of the beneficiaries. Let's assume the beneficiaries are A, B, C, and D. D, C, B, and A. These are the beneficiary of the trust deeds. So, The income that are accessible in the hands of beneficiary include share of distributable income, share of the distributable income, share of the distributable income. Then we may have fixed annuity, fixed annuity to the beneficiaries. So let's assume only C and D were given the annuity. Then we have discretionary payment. Remember, I've told you discretionary payments are payments made by the trustee based on his discretion to the beneficiaries. So, discretionary payments. Then the total of all this give you the accessible profit in the hands of the beneficiary. Other terms that are used in estate settlement and trust include, number one, we have annuitant. Annuitant is a person who receives annuity. A person receiving an annuity is said to be an annuitant. That is a person receiving annual payments from an estate. So a series of equal sum of money payable at a regular interval is said to be annuity. So a person who is receiving an annual payment from an estate is said to be the annuitant. Number two term which I'm going to examine is legatee. Legatee. Legatee is a person who receives a gift of personal property. A person who receives the gift or a gift of personal property is said to be the legatee. This legatee can be divided into two. We have the specific legatee and residual legatee. Specific and residual. Specific legatee is the person who named in a will to receive a particular thing. A person whose name is in the will to receive a particular thing is said to be the specific legatee. Specific legatee is a person whose name is in a will to receive a particular thing. Residual legatee, this is the person who receives what is left. That is the person who receives the leftover after the specific legatee have been settled. The person who receives the leftover after the specific legatee have been settled is said to be the residual legatee. Residual legatee is the person who receives what is left, that is the remainder of the personal property. The person who receives the remainder of the personal property after the specific legatee have been settled, that person is said to be the residual legatee. Then, number three, we have devisee. Devisee. Devisee is a person who receives real property under the will. The person who received real property under the will is said to be the devisee. Example, this question is obtained from ICAN study test. Baba Ali Musa is the trustee of a settlement made by late Malam Junaid Diko in favor of his 4 children, grandchildren, and others. He submitted the following information to the Zamfara State Internal Revenue Service for assessment purposes for the fiscal year December 31st, 2017. Interest received 2 million naira. Dividend gross 8 million naira. Rental income 6 million naira. Business profit 16 million naira. Miscellaneous income 3.2 million naira. Trustee remuneration fees 450,000 naira. Variable 2% of gross income. Fees annuity to grandchildren ANAN 50,000 naira. Downladi 30,000 naira. Administrative expenses 2.6 million naira. Additional information. 1. Trustee made discretionary payments in line with the trust deed to the beneficiaries as follows. Wakilu 150,000 naira. Aishat 200,000 naira. Iliasu 250,000 naira. Badamasi 180,000 naira. 2. Each beneficiary is entitled to 1/6 share of 2/3 of the distributable income. 3. Capital allowance agreed with relevant tax authority is 4.2 million naira. Required. A. Compute the net income accessible in the hands of the trustee. B. Accessible income in the hand of each beneficiary. Now, let's have the solution to the question. The requirement is you have to compute the net income accessible in the hands of the trustee. You start with, you should first of all identify the person whose estate is it. This is Baba Ali Musa is the trustee. This person is the trustee. So it's not the owner of the estate. Trustee of a settlement made by late Malam Junai Diko. So the estate belongs to late Malam Junai Diko. So in your heading, you write Malam, not the name of the trustee, Malam Junai Diko settlement. Now, in requirement A, you are to compute the net income accessible in the hands of the trustee. So you have computation of accessible income in hands of the trustee. 4, you have to put the year of assessment and it has to be correct. So what is the year of assessment? The fiscal year, the accounting period is the period ended December 31st, 2017. If you put for the year ended, it's wrong. If you put December 31st, 2017, it's wrong. You don't need the month. This is not needed. So the year of assessment, since it is PYB, preceding year basis, the year of assessment will be 2018. 2017 is the year preceded 2018. Therefore, you have for 2018 year of assessment. Remember, if you look at the requirement, compute the net income accessible in the hands of the trustee. The year of assessment is not specified. But in your solution, you have to state the year of assessment. You start with the income. So, back to the question. You have business profit, 60 million naira. Business profit of 16 million. From the business profit, you deduct capital allowance less capital allowance. How much is our capital allowance? Back to the question. Capital allowance agreed with relevant tax authority is 4.2 million. So you put 4.2 million as your capital allowance. If you subtract 4.2 million from 16 million, you'll be left with 11.8 million. So other income include interest received, 2 million. Interest received, that amounted to 2 million naira. Then we also have dividend, and dividend is already reported gross. I've told you where this dividend is reported net, you have to make it gross. That means withholding tax of 10% have already been deducted. Withholding tax rate is 10%. So it means the withholding tax have been deducted from that dividend. That is why it is reported net. This one, no withholding tax have been deducted. That is why you have it as gross. I told you that withholding tax are tax deductible at the source, and it's usually deducted from those income called franked investment income. So dividend gross 8 million. Dividend gross 8 million. That 8 million will be written, but where dividend have been reported net, you have to make it gross. Then we also have rental income 6 million. Rental income 6 million. Back to the question, business profit have been considered. Then we have miscellaneous income of 3.2 million. Miscellaneous income, that amounted to 3.2 million. If you check the question, there are no other incomes. No income apart from those one we've considered. So we now sum up all the income in order to arrive at the gross income. Let me quickly correct this. I mistakenly wrote 16 million instead of 18 million. So please correct your question. Or if you go through the study test, it is written as 18 million. So the business profit is 18 million, not 16 million. 18 million less capital allowance of 4.2 million. So you have 13.8 million. 13.8 million. Now, so if you add all this income plus 2 million plus 8 million plus 6 million plus 3.2 million. So we have 33 million. That is the gross income. 33 million. So the gross income amounted to 33 million. From the gross income, we now deduct the allowable expenses, less allowable expenses. Remember, as I've explained earlier, I've told you gross income less allowable expenses will give you the computed income. What are the allowable expenses we have in the question? So allowable expenses include trustee remuneration, which is divided into fixed and variable. Fixed remuneration is 450,000. So now let's have trustee remuneration, which is divided into fixed remuneration of 450,000 450,000. Variable. You were told that the variable remuneration is 2% of gross income. 2% of gross income, which is 2% of, and our gross income is 33 million. 33 million. What is 2% of 33 million? That gives us 660,000. 660,000. You add it to 450,000. So the trustee remuneration will be amounted to 1,110,000. 1,110,000. Back to the question. So we have fixed annuity to grandchildren, which include Aminat and Daladi. Fixed annuity to grandchildren, which include Aminat and Danladi. The fixed annuity to Aminat, 50,000. Danladi, 30,000. Aminat, 50,000. Danladi, 30,000. Back to the question. We have administrative expenses, 2.6 million. Administrative expenses. We have 2.6 million. Additional information, we have trustee made discretionary payments. It's not part of their liable expenses. Then if you look at note 2, this beneficiary is entitled to 1/6. These are shared. And note 3 is capital allowance. So these are the available allowable expenses provided in the question. So 1,110,000 plus 50,000 plus 30,000 plus 2.6 million. Allowable expenses is totaled 3,790,000. If you subtract that from the gross income of 33 million, so we arrive at the computed income. Computed income. Computed income is gross income less allowable expenses. And our gross income is 33 million. By the time we subtracted the gross income from allowable expenses, you arrive, by the time you subtract the allowable expenses from the gross income, we arrive at the computed income of 29,210,000 naira. After this, we consider the discretionary payments less discretionary payments. Those payments that were made by the trustee to the beneficiary based on his discretion according to the trust deeds. Trustee made discretionary payments in line with the trust deed to the beneficiaries as follows. Wakilu, 150,000. Aishat, 200,000. Now, let's have Wakilu. 150,000. Then Aishat, 200,000. Back to the question. We have Ilyasu, 250,000, and Badamasi, 180,000. Iliasu, that is 250,000 naira. Adamasi, that amounted to 180,000 naira. Then, by the time we subtract all those amounts, we have 150,000 plus 200,000 plus 250,000 plus 180,000. We have 780,000. By the time we subtract 780,000 from 29 million to 10,000, then you'll be left with 28 million 430,000. So now subtract the frank investment income less dividend. That is gross amount. The amount you report here. So dividend, 8 million. That is the amount you are going to subtract. So let's subtract the 8 million here. 8 million. So if you subtract 8 million, you'll be left with 20 million 430,000. 20 million 430,000. That is the balance available for distribution. Balance available for distribution. This amount now will now be distributed to the beneficiaries based on the trust deeds. So with less distribution, how much of that income will be distributed? So now let's go to the additional information. 2. Each beneficiary is entitled to 1/6 share of 2/3 of the distributable income. That means of the total income obtained, 2/3 will be distributed, and each of the beneficiary will get 1/6 of whatever you have. Now, how much will be the distributable income? How much is the total income? We have 20 million. That is the amount available for distribution. 20 million 430,000. Now, amounts to be distributed. Amount distributed from note 2. 2/3 were to be distributed. 2/3 of 20 million 430,000. 20 million 430,000. That is the income we want to distribute. 2/3 times 20 million 430,000. So we want to distribute income of 30 million 620,000. I'm only showing this here as a work. That is the amount we want to distribute. And each beneficiary will not get, 1/6 of that income. No, we have calculated 2/3 of the amount available for distribution. 2/3 of it has been calculated, and we got 30 million 620,000. Each beneficiary will not get 1/6 of that. And what are the name of the beneficiaries? The beneficiary include Aminat, Danladi. Now let's have Aminat, 1/6 of 30 million 620,000. That gives us 2,270,000. The second beneficiary we have Danladi. 1/6 of 30,620,000. That gives us 2,270,000. Then the next beneficiary is Wakilu. We also have Aishat. They have Wakilu. 1/6 of 30,620,000, which is 2,270,000. Then Aishat, 1/6 of 30,620,000. That is 2,270,000. Then we have Iliasu and Badamasi. Iliasu, 1/6 of 30,620,000. That gives us 2,270,000. Then Badamasi, 1/6 of 30,620,000. That gives us 2,270,000. How many are the beneficiaries now? 1, 2, 3, 4, 5, 6. 6 beneficiaries. So if you sum up all this, the total will be 30,620,000. You now subtract the 30,620,000 from the balance available for distribution of 20,430,000. Now let's subtract 20,430,000 minus 30,620,000. Then the balance is 6,810,000. 6,810,000 naira. That 6,810,000 is the balance accessible in the hands of the trustee. Balance accessible in the hand of the trustee. 6,810,000. That is the solution to A part of the question. In the B, you are to compute the accessible income in hands of each beneficiary. So we have Malam Junaidiko settlement. B, Malam Junaidiko settlement. Computation of accessible income. Accessible income in hands of each of the beneficiary. I want to rub out this information, but they will still be used because this one belongs to Aminat. This one will be assessed in the hands of Danladi. We have 6 beneficiaries. 1, 2, 3, 4, 5. Let me include this place as 6. 6 beneficiary. Aminat, Danladi, then Wakilu, Then we have iChat. Then we have Iliasu. Then we have Badamasi. These are the 6 beneficiaries to the trust deed. So, from our earlier computation, that is from this accessible income in the hands of the trustee, or from the computation of chargeable income, each of the beneficiary got 2,270,000. So we can have share of distributable income. Share of distributable income. Each of them got 2,270,000. 2,270,000 for each of them. 2,270,000. 2,270,000. 2,270,000. 2,270,000. 2,270,000. Each of them got this amount. Then we also have discretionary payments from note 1. Wakilu, Aishat, Ilyasu, and Badamasi. There is a discretionary payment made to them. 150,000, 200,000, 250,000, 180,000. Now, discretionary payments. 150,000, that is to Wakilu. 150,000 to Wakilu. Aishat got 200,000. 200,000. Then Ilyasu got 250,000. 250,000. Then Badamasi got 180,000. 180,000. That is discretionary payment. Now, I've rubbed off some information, but do you have any income that goes to any of the beneficiaries? Then we have fixed annuity to Aminat 50,000 and Daladi 30,000. Fixed annuity, Aminat 50,000, Daladi 30,000. Yes, discretionary payments have been considered. So these are the only income that are accessible in the hands of each of the beneficiaries. Let's sum up what goes to each of the beneficiaries. So 2,270,000 plus 50,000. 2,270,000 plus 50,000. That is total 2,320,000. That is to Aminat. 2,320,000. Then, if you sum up this, you'll be having 2.3 million. That is Danladi. 2.3 million. Then Wakilu, 2,270,000 plus 150,000. That is total 2,420,000. 2,420,000. Then iChat, 2,270,000 plus 200,000. That will give us 2,470,000. 2,470,000. 2,270,000 plus 250,000. That is total 2,520,000. 2,000,000 270,000 plus 180,000, that is totaled 2,450,000. That is the accessible income in hands of each of the beneficiaries. So this marked the end of the solution to the question. Please drop the love emoji. Also share the video with others. Thanks for watching AZICAN.